Process costing. Meaning of process costing. Process costing is a method of costing used to find out the cost of a product at each stage or process of production. There are certain industries where the raw material passes through different stages of production before it becomes a finished product. In such a cases, it is desirable to find out the cost of the product at the end of each stage or process. This purpose is served by process costing. It is employed in chemical works, soap making, oil refining, textiles, paper, food products, iron and steel, cement, etc. Then we'll see the features of process costing. Production is continuous. The final product is the result of a sequence of processes. The unit manufactured are standardized and identical. The output of one process is the input of the next process. The output of the last process is transferred to finished stock. Cost of material, wages, and overheads are collected for each process and debited to the process account. The cost per unit is arrived by dividing the total process cost by the number of units produced. The total cost of the finished product is the sum of all costs incurred in all the process. Now we'll see the problems on process costing. Problem 1. The following expenses were incurred for the production of 1000 units of durable product. Material, rupees 3,50,000. Wages, rupees 1 lakh. Overheads, rupees 50,000. You are required to prepare process accounts assuming there were no loss of units. So we'll prepare the process account. So just to put it on the debit side, material 3,50,000, wages, otherwise called as labor 1 lakh, overheads 50,000. So in the unit column, you can place 1000 units. Then you add all the amount in the debit side and as well as units. So 1000 units, 5 lakhs. You put it on the credit side by finished stock. 1000 units, 5 lakhs. Then we move to the problem number 2. In a factory, the output of a product processed through two process A and B. Prepare process account from the following details. First one, particulars column, direct materials, rupees 10,000, direct wages, rupees 4,000 for product A, process A, chargeable expenses, rupees 8,000, process A. Then for process B, direct material 6,000, direct wages 2,000, chargeable expenses 4,000. Overheads amounting to rupees 6,000 are to be apportioned on the basis of 100% of direct labor. So you prepare the process A account, the debit side. You place to direct material 10,000, direct wages 4,000, chargeable expenses 8,000. Then overheads 6,000 are to be apportioned on the basis of direct labor. So to overheads, direct wages 100%, that is, it is 4,000 direct wages. You charge 100% on direct wages, it will be 4,000. You add all this amount, altogether it comes around 26,000. So on the credit side, the balance amount by process B account, output transferred 26,000. So process A we have completed. Then we can move to the process B. Under the process B, we have the process A output 26,000, direct material 6,000, direct wages 2,000, chargeable expenses 4,000, overheads 100% on direct wages, that is 2,000 rupees. You add all the debit side, it comes around 40,000. So by finished stock balance on the credit side, it is 40,000. Then we'll go for problem number 3. Product A passes through 3 distinct processes. The product is transferred to finished stock after the third process. Prepare the process account from the information given below. Particulars: direct material, direct labor, direct expenses. Process 1. Direct material 4,000, direct labor 1,500, direct expense 650. For process 2, direct material 600, 1,600 and direct expenses 400. For process 3, it is direct material 550, direct labor 900. Total production overheads during the period were rupees 6,000. It is to be apportioned to different process on the basis of 150% of direct labor. There was no opening or closing stock. Production during the period was 200 units. So process 1 account we can prepare now. Direct material, it is 4,000 divided by 200 units, it comes around 20 per unit. Direct labor, 1,500 divided by 200 units, it is 7.50. Direct expenses, 650 divided by 200, 3.25. Then production overheads. So it comes around 6,000. It has to be apportioned on the basis of 150% of direct labor. So 150% of direct labor, it comes around 2,250 divided by 200 units, it comes around 11.25. You just add the debit side, you transfer the amount to the credit side by transfer to process account. Next process 2, 4,200 per unit, 42 per unit, then amount it is 8,400. So then we'll go for process 2 to transfer from process 1, 8,400 amount column, then per unit is 42,000. Then direct material 600, direct labor 1,600, direct expenses it is 400, then production overheads 150%, it comes around 2,400 on the direct wages. Then you have divide everything by 200 units, it comes around transfer from process 42, direct material 3, direct labor 8, direct expenses 2, then production overheads 12. Then you just add all this debit side, unit as well as amount column, you transfer to next process 2. That is 13,400 amount column, then 67. Then you go for process 3 account to transfer from process 2, that is debit side, amount 13,400, it is 67 per unit, direct labor 550 divided by 2 point, that is 200 units, it comes around 2.75. Direct labor 900 divided by 200, it comes around 4.50. Then production overheads 150% on direct wages, it comes around 1,350. That is 1,350 divided by 200 units, it comes around 6.75. So total, it comes around 16,200. Then the per unit column, it is 61. That is 16,200 divided by 200 units. So just add all this amount, debit side, you transfer to credit side by finished stock 16,200 divided by 200 units, it comes around 81. So process 3 account is completed. See the working notes. Production overheads is 150% of direct wages. That is process 1, 1,500 and 150%. It comes around 2,250. Process 2, 1,600 into 150%. It comes around 2,400. Then process 3, 900 into 150%. It is 1,350. The process 1 and process 2 and process 3, this amount will be transferred.